you give to investors that want to implement digital assets in their portfolio, like she said, to fight inflation, for example, hedging against inflation?
It's a very fast topic, to be honest with you, in terms of investment. There are a lot of things to be taken in consideration, but for you to understand it and make sure that you go away with the learnings, I would put it in an acronym called CIA. Has nothing to do with the FBI and the US stuff, by the way. So C standing for you need to go and conduct research of your own. If you don't research yourself, honestly speaking, it's going to be very difficult for you to learn it. I'm not sure if Anita's still here in the room or maybe she's outside. She's probably amongst the oldest. I hope she doesn't mind me saying that. But at her age, she's launched her own crypto nannies, by the way. So that tells you by you on researching and learning, you'll be able to do something. So that's understanding C. The most important thing about all is having an investment strategy, not only for digital asset, but overall. So if you're an investment manager, you've got funds and so forth, you have to have very clear terms of references for investments. What is that you want to invest on? Is it what type of asset you want to invest on? Jurisdiction you want to be in? And the yield that you want for every one of them. And you need to understand your risk tolerance. So for example, if you want to invest in digital assets and it's a cryptocurrency, which type of cryptocurrency you want to invest? Are they related to a certain project or certain other projects? So you have to be very, very minute in your investment strategy. Start to be very, very clear. And every asset class that you invest on will have a different way or weightage for it in the portfolio. So you do your asset allocation in that case, saying it, okay, for bonds, I'm going to put maybe 40% because they're safer than the others. Cash will have a weight over there. Crypto asset, given that it's very volatile, you'll also need to put a certain percentage for that, and it's very important. And you need to monitor this portfolio. You can't just make it and have a portfolio and that's done. Coming to the CIA we talked about, please seek advisors. Get financial advisors. If you don't, I deal with a lot of family offices, corporates, and I deal with them, consult them, give them a lot of advice. It's important that you go to people who understand this business, whether it's a digital assets or any other investment for that matter. Unless you have your own CIO within your office, please go seek advice for you to make sure that you do the right thing. Otherwise, it becomes very difficult to manage your portfolio and you'll burn your fingers. I've seen people burning lots of millions of dollars just because of whatever the three things I mentioned were not implemented.
Thank you very much. So basically, it's the very classic do your own research before investing, be smart about your investments. And talking about so Sam, you have a lot of people coming to you. You give exposure to projects. And what kind of strategies do you use to show and so that those projects seems legit and people can draw correctly? How do you manage this?
There are too many people on their mobile phones. The gentleman in the second row with the glasses, give us a bit of your attention. We need you. Okay, thank you. So what I would like to add to Maher something, because he said something very interesting. What it is we need wise people to support smart organizations. We have so many smart projects in the market, and really I can't follow up with these kids or teenagers or young people. My son is almost becoming 14, acting like 18, wants to make money of 25. So I tell him it doesn't work like that. So, but I can't be smarter than him because the way of how he consumes, interacts with the opportunities, I think I'm 50 now, and maybe a little bit the train is too slow in my mind compared to the train is moving around. But we can teach him to be a wise support. And I think maybe Mahara, allow me to add on that, because we both, maybe from our age, you look much younger than me, we reflect a little bit of the experience we had. Nobody can take us anything away from it. To answer your question, I'm not a big fan in digital asset as a focus, because many organizations that try, and I'm the chairman of the Crypto Valley Partners in Switzerland as well. When I say that to my partners, they will all get in shock. I said to most of the people that want to sell with cryptos the future profits of tomorrow. And it doesn't work like this. I said, guys, produce, create, develop, prove. And then people will anyway buy a share from your company, if it's through crypto, if it's through digital asset, whatever you want to call it. But make first business, and don't spend your marketing money by investors on yard parties afterwards in the evening and call it marketing. So we need to watch who is on the football field playing fair, playing good, playing disciplined, and is again and again in the training lab where other people just resting. These are the talents you can invest in, where you can put smart capital, as Maher said, into the company and inject them, and where the outcome is that, when maybe this promise over there can reflect in business, where you say digital asset can be beneficial. It depends in which character you invest, and it depends in which performance you trust to make sure that your investment is well placed. So invest in passion, invest in creativity, invest in your idea, and trust me, the profits and the business will chase you back. And that's what I believe in.
May I add to that? I think I really want to echo this thing and stress now more a lot.
Yes, don't be shy. Give us applause for all three of us. Thank you.
It's very, see, we're running a program with the Ministry of Economy to train the next generation of family offices through our Venture Studio program. And the first cohort just graduated in February in terms of the program. One other thing I teach them and tell them, and I was lucky enough, had the benefit of being working in Venture Studio since 1993, that's when I was at Citibank. And one other thing I always tell people, and echoing to what Sam is mentioning, please get your why correctly. Why you want to do what do you want to do? If you don't know that why, please don't pursue it. Trust me, you will set yourself a failure. We've seen many businesses fail. Do you know how many startups actually fail globally? The percentage is 90%. That's a fact. The reason we don't know that, because we only see the successes. We don't see the failures. We learn from the failures, by the way. That's why Venture Studios were established along with the Ministry of Economy, because Venture Studio have a higher success rate, 30% more higher, because the theme behind Venture Studios is you beat the idea so much to make it fail. And if you stand up the failing, that's mean this is the idea you need to pursue. So please get your why correctly. What is the business that you want to do, why you want to do it, and then you follow what Sam said.
All right, talking about the fair players, the good players, we all, let's focus on safe havens. What digital assets, Paula, do you think is needed? What are the good players? We heard about Bitcoin. Can you tell us more about what kind of digital asset we can have to consider it like a safe haven?
Well, as I mentioned earlier, I wouldn't refer to digital assets as safe haven, not yet. At least what I'm seeing in the market is that despite they're supposed to be a completely different asset class, I believe that they fall more under the alternative assets than safe havens, and they're not supposed to react together with the market. But what we had been observing is that most of the cryptos are reacting the same as the tech stocks. So they don't even serve so much as risk diversification, but definitely, again, we're talking here about the long term. This is what we have been observing in 2022. But maybe if we talk about like overlay picking assets and how to create a digital assets portfolio, particularly if we believe in the industry, then I love approaching everything professionally. At least that's for my portfolio. Like for liquid assets, what I would do is, number one rule in finance is to always have cash. Never forget, never invest everything that you have at least, depending on the market conditions, like if it's a bear market, probably hold more cash, be ready for the opportunities. It can be anywhere from 5% up to 40% of your portfolio. And then what we do in traditional portfolio, we're gonna add some fixed income, some blue chip stocks, right? And I consider the high market capitalization as blue chip in crypto. So I'll definitely have few of those. Then I'm gonna add a bit of opportunistic things, and then we're going to leave 5% for risky assets, right? And these risky assets can be meme coins, it can be NFTs, it can be anything that you like and you see potential in.
Yeah, well, basically investing in all type of assets by having a strategy to thinking of a growth rather than just fighting inflation.
Exactly.
All right. So
Kevin, do you allow us to keep on adding, if you don't mind, to make it more conversational?
Go
If
ahead.
you don't mind.
Go ahead.
I think to Paula's point, and I think we need to understand, first of all, we need to appreciate that the cryptos, particularly or digital assets, are here to stay. So we recognize that, and it's going to happen. And trust me, it's a matter of time that the government will be doing it. Today, we have a lot of governments fighting it. There are very few governments actually supporting it, like Japan, Singapore, and Dubai, UAE, per se. But many governments are fighting it. But it's a matter of time the government is supporting it. The challenge is because they're decentralized completely. But what government is missing today is how do we work along with the players to make them conducive for the environment, to protect the end users, and then make them adoptable. So you would ultimately have certain asset allocation for the digital assets for the future to grow, because it's relatively very new today. So you might be burning fingers because they're volatile. So you need to make sure that you have some part of that thing, but it's a small size of that thing. So at least you can benefit if there's an upturn happening as well. So keep that in mind and don't have a higher allocation, as also Paula stressed on this, because you have other asset classes which are very, very important, still giving you the yield from it. And as this evolves and as the government evolves, you'll see the value of this increasing hopefully in the future. But it is difficult for you to coin anything to be a safe haven, to be honest.
Yeah, and I think you pinned out something interesting about the regulation. Is it safe to have something that has a different regulation everywhere? Can you imagine, like in some countries it's illegal, and in other countries it's like hands off, like you do the work?
Why do you think regulators need to exist? And I've had this debate, and I think Mohammed was with me on when we launched Meta Dubai in the assembly in September last year. And we were discussing about, do we need to be regulated? And I think quite a lot of them says no, and some said yes. So I had to start working on a journey of converting people to make them convinced they need to be regulated. And I'll give examples. So, which is the same example I gave to the panels at that point of time. If you remove the radar system in the road, what do you think is going to happen to traffic and speeding? People will speed more? Show of hands? How many think people will start speeding more? Those who did not raise hand, do you think people will not speed more? They'll be more self-conscious? Guess what? Statistically proven, we always work with a bell curve. The human mind think always of the important positive, but remember what? They're only the outliers. They're only the 5%. So we go only 5% of the people statistically proven over centuries that they will follow the rules. They're opposite the 5%. The other 5% will never follow the rules. And that's why we don't have so many cells in the world, right? But where are the majority of the people? In between. So you go 70, 90% on between. Proven statistically that the people will actually violate the rules because there's no moral anchor to rely on. I took another example. I said, let's take a notch higher, remove the signal lights, traffic lights. What do you think will happen to the traffic? It will be chaos. What does that mean? These are simple examples and we can go on. We require control. We need to be guided as Homo sapiens. If you leave Homo sapiens alone, we'll be against each other's throats. And look at the wars we're having. I'm not turning to a political discussion, by the way, but look at how many wars that have been having over centuries. Why? Some of them lost the moral angle. Some of them have the oomph of going and getting things done. So we need to have some regulatory environment to be there to support us. So Dubai, for example, have VARA. Most of you heard about it, the Virtual Asset Regulatory Authority. Their job is not to block you from doing something. They're working as a referee and not as a goalkeeper. And that's the difference between them. So they're helping you to make it happen. Why do you think regulators exist? Their ultimate motive is to make sure those people who are vulnerable are protected. That's the main essence behind that. So it's important to have regulation. So Japan and Singapore also adopted the same way of making sure that they are helping the environment, helping the people, protecting them from criminal activities and so forth. Now, a very important question, if we have differing regulation between countries to countries, what's going to happen? Arbitrage. You'll make use of something which is not there. You know what's happening globally when arbitrage happens? In European unions, you're not allowed to sell certain pesticides because they're lethal. Because Brazil does not have that regulation and Argentina does not have the regulation, they're selling it to these Latin American companies. You see, the moral angle did not stand. So it's important to have a well-thought regulation who's working with the private sector and the public sector as well.
Go ahead, Sam.
I like what Maher said. It doesn't mean that I can agree with everything. First, for me, I say, by the way, I don't gonna go to political way too long, but I would say let's have more faith in humans which have ethics and want to do a good business instead of finding gaps of, let me say, doing something which should be nice for anybody else. But, and I don't believe in over-regulation, because over-regulation will lead as well to disorganization and misunderstanding, and as well for the weird guys in the market to find more gaps. That means it's like if you use too much, I'll give you another example from your car point to cleaning. If you clean the kitchen too much with chemicals, the viruses become even more sensitive and bacteria learn out of it how to actually sustain, right? So if you clean too much, that means the opposite thing will happen to you as well, because you can't anymore define who's good and who's bad, because I find their niche. So, but this is a different topic. I want to go to safe haven and investment in digital assets. The problem is what we're seeing in the market. Everybody knows something about post-quantum development. He's smiling, which is good. Because currently, with the deployment of the quantum computers, every single wallet on the planet can be hacked by a normal IT engineer within 2 minutes. So it is nothing. That means if somebody puts an eye on Bitcoin and puts the right quantum computers into a chronological order of development of cracking it, he needs 3 to 4 years by current status. So we need to think what is actually safe haven of investing into digital assets, to own it, to keep it, and to be yours, and then as well to secure it for you as an asset, because an asset is midterm to long term. And here we have a huge gap. I mean, we know people are working on post-quantum to actually develop real independent decentralized blockchain, because so far there's no decentralized blockchain existing in the world apart from maybe Bitcoin, but this is a different topic we can talk about. But wherever there is a server in the center, that means it's centralized. Do you know, by the way, who was the first human being who used blockchain? Who was the first one in the world to use blockchain?
You'll say Satoshi?
Okay.
No.
Really?
Well.
Mickey Mouse? No, it was Moses. He had blocks, he got a download, he connected the blocks and spread to the world. That is the only existing independent, decentralized blockchain on the planet where people follow the rules of principle of ethics of life. Right or not? Blocks, download, spread out. That is actually a blockchain, but we don't have that so far. So we need to understand how we define safe haven of assets, digital assets. And here where the government, and I agree with Maher, can come the regulators into it to protect against that what might come. Because we don't forecast. And I don't think the government were in a rally with people developing a complete new era of industrialization, digitization, is about making sure that we get the balance, equality of business doing and ethics, especially in this part of the world. I can't talk always for Europe or North America or wherever, because there are the giga brands behind the scene which are playing their games as well. But this is a different topic as well. But in this part of the world, they want to attract business to give people a safe haven.
All right. So you talked about the risk in regulation, about the law. You talk about the risk about quantum. Like basically, you answered really well the question about safe havens. Like, is it safe to have? If there is a risk, the safety comes down. What do you think on this?
Actually, I just wanted to add something about regulation, because it's a topic I'm very passionate about, and I'm really personally hurt and upset about the bad reputation the whole sector has. And I think it really went on the wrong foot, because what happened essentially with crypto is that retail people started offering to other retail. The end consumer is basically a retail investor, financial services. So they're all type of services, like their deposit, maybe the names are different, they call it staking, but else than the ones that you really use proof of stake, the rest is just a name, a label that they put on the return that they give you. And they're basically giving you financial advice. They're taking, example, like if today together we come along and we launch a stock, and let's say we get money from the people in this room through the traditional banking system, and then the stock disappears, our company disappears, we're all going to jail. But we do the same with the token, we go and we enjoy tonight. So this is absolutely wrong. So I don't believe that there will be any further development in the sector before regulation comes in place, because still the majority of people in the sector are retail. And as financial services are highly regulated, this needs to be in place for us to go forward. And obviously that's the issue of the common regulations. Still, even about financial services, we have the DFC, then we have ADGM, right? And then we have US, and then we have FCA. So it's an issue, but I still think that the benefits will be way more than the cons.
Exactly. So basically, you all agree to say you have bad weeds in the crypto environment, and there is a need of regulation in this type of environment, and you give freedom to all the people, and you have the 5% that comes and try to scam the 95%. And so, but some people on the 95% don't want the regulation because it will shackle them. So I don't know if you heard, I'm sure you did, about trustless blockchain and protocols, meaning you don't need trust when you invest in something. It's all code, it's all in the blockchain, and will this be a self-regulatory landscape for the future?
Look, Paula is the youngest amongst two of us, right?
Older than you, by the way.
Really? We can talk about it later. No, but Paula is representing the younger generation. Would you agree, Maher? So how many of you, by the way, are representing a startup in the ecosystem? Wow, there are a lot of them. Okay, so I would say the market in general, the ecosystem, is more really a friendly and a really buzzing one and a really cool one. I haven't seen so much bad as people try to promote. And I give the trust to the ecosystem. They're going to protect and support each other. Because if somebody's a scammer, I mean, everybody knows it. There are a couple of Telegram groups on around, and boom, it gets posted. This guy is naked on the street, and nobody will look at him anymore. Right? I mean, we experience it, all of us. So when we have somebody who's bad, it goes around, and everybody's like aware of who's potentially scam or not, maybe wrongly flagged, but anyway, but immediately disclosed, right? So what I believe is creativity in production and creating and producing can only be flying if we give the freedom of existence. So, but when the regulation comes in, because of whatever happened around, the FTX of the world, whatever, it wasn't a good thing for us. But I mean, that is a different story why that happened, because I don't agree what mainstream media is talking about. But people like her, like Paula, for example, she needs wise people, maybe like us, right? But she needs as well the creative freedom to develop, to make it. It needs funding, and nothing is a fast ride. What is happening with people like Paula in the startup development, or you have invested potentially as well in many of them. The investors, they come in as low-hanging fruit for the idea and owner. The investors, they come and they want to return in X days and X level. And that is not happening. And they have to learn the hard lesson. It is a midterm run with a marathon exercise. Okay? And this is where we need to tell the investors, this is what you have to give them, the developers, the creators of the Paulas of the world, to let them really develop and create. Give them time to breathe. I have people coming to me with their investor who invested the first 250K and has a red hat because it was pushed by the other one and said, after 2 years, I want to see some money coming back. They force him to deploy coins of the business, of the profits of tomorrow. That means they go in debt. Means they go already in the gray zone of being almost illegal because they give a promise they can't even keep the promise later stage. That's why we need that, what Maher said, to protect these young people. And I believe we need to protect as many as possible, that these people can actually lead us to a direction we even don't know what's coming. Because already I saw people, guys, they're talking, I thought like an alien is in front of me, but we need to encourage them. If they fail or not, it doesn't matter. We're going to learn out of it. And that's what I believe in.
Exactly. So old word, new word. Can you add a little with this?
I know the time is for flying, and this is an interesting topic. We can talk about it till tomorrow morning. But I think we recognize that we need balanced regulation, and we require it. We don't want too many regulation to curtail development and creativity and innovation. We're not asking for that. We're asking for balanced regulation, which will help those people who are vulnerable. And we do.
Dubai is doing it right way.
Middle East, exactly what we're trying to do in Dubai, right? And I sit on the committee of the metaverse as well with the Ministry of Economy, and I sit on a committee of other committees as well in digital economy. So we're trying to do it in a very balanced way. Japan is doing the same way. Singapore is doing the same way. I don't know any other country doing the same way except these two, by the way. I've been with the European countries. They're really completely on the other arch of the whole thing. So it is important to have balanced, because quite a number of us do not understand what's going on in the digital economy. They're honestly really, really vulnerable, and they need somebody as government to come and protect them as a consumer protection law. We don't want to be doing it so much like the others are trying to do. For example, US, I think they're going yo-yo. You've got a company like JP Morgan, and it's the public news are mentioning it. They've invested $240 million, their investment manager. And Jamie Dimons, who's the CEO of the company, saying it, I'm against it. Can you believe it? It's market news. It's all in the market. So you've got contradictory oxymoron happening within the same company.
Agenda driven.
Yeah.
Would you like to add something? There is 2
Don't
minutes
look at the
left for the
time.
questions.
Reem is here. We are good.
Reem, it's okay.
Go ahead.
So you
yeah.
have lost the idea?
So thank you for your interventions.
Maybe you have some questions from the audience.
Exactly, I was saying
Yeah.
thank you first. So basically, we have a few minutes to answer some question. Does someone, yeah, first, can you please give the guy a mic? Everybody else, please think about a question you're interested about the subject so we can answer it. Thank you. Just 2 questions. So this one and the next one.
Hello? Yeah. Oh, thank you. Yeah. Thank you, Matt. Yeah, it's working. First of all, I would like to thank you, Mohammed Nadi. I'm the CEO of Keen Enterprises. Thank you so much for that panel. And I have a question for Sam, especially the topic he raised up about the quantum computers. So do you recommend that the people can storage the assets in cold storage? And using that will kill the idea or make the digital asset secured on the cold storage, or how we can secure that digital asset in the future. Instead of keep it open, so that will bring a lot of doubt in the market.
I wouldn't say cold storage. I would put it in the freezer, by the way. But I'm not an IT expert, but I can tell you one thing. There are people, there are not many in the world, by the way, and we have a group in Switzerland now working on it, working on actually a complete different level of post-quantum development to be able to secure e-wallets in a complete different manner. Because cyber attacks is going to be a hobby for many people to come. And organization, whatever, they're going to be intelligent, they're going to be this, they're going to be this. It's a completely different ballgame we are facing. And yes, you need to see when you buy your assets through organizations. I don't want to name now anyone. Nobody can promise you absolute security and no insurance backed with it. I know only 2 in the world. That's it. They're good in the highest level. But what is coming now, anything which is anyhow connected can be hacked within a glimpse of an eye. Did I answer you the question? I said put it in the freezer. Offline. 100%. No, it depends how you have an history link to anything when you purchase and when you navigate into your investment. You need to make sure that you do it in one line, one shot, with the most secure level, and then go completely offline and put it in the freezer. Means check out the best opportunity how you can do it. Yeah.
Mai, you wanted to add something to this?
I just want to add to the cybersecurity. We did not touch upon it. Just give you a perspective from my financial background, be working for 28 years in a bank. One of the American banks I was with in US, our budget in 1993 for combating fraud and cybersecurity then was $460 million, right? And this is a regulated market. Do we think that we don't have our cybersecurity and blockchain and all these things? We have. How many of us, if for the show of hands, sorry, I'm asking again, believe the blockchain is 100% free? I mean, it's 100% secure. Nobody. I'm glad. Thank you very much for saying. The cybercrime last year, 2022, it reached the peak of $3 billion. Forbes have written a very good papers on that thing on December 28, 2022. $3 billion, of which 2/3 came from blockchain, what do you call the blockchain bridges, which is the interoperability model between going from one blockchain to another blockchain. So people actually hack the nodes. And 2 billion just was only from blockchain were hacked. So it's a very vulnerable market. Why? Because these people who are running the cybersecurity and all this thing, they're PhDs themselves. They're very smart people. They're exactly smart people who are creating the blockchain. And blockchain is not here to stay. There's a new technology going to evolve, going to happen, and we're going to replace blockchain. It's just a matter of time. It's every 10 years you'll have something new happening. Thank you.
I think that was 2 questions in the form of 1. So big round of applause for our panel.
Thank you, Paulo.
Thank you very much,
Let's do a
everybody.
group photo.
Sorry
Thank
we
you.
messed up your seating arrangement, but
If you have any questions
It's
about...
not my seating arrangement. It's fine with me. Let's do the photo. Oh, sorry, go.
Anyway, any questions about safe